there. Good morning. Good morning. Welcome to the final day of CES. And for those of you joining us on live stream, welcome to you too. Still in your sweatpants, we're envious. And we're just so happy you're all taking a break from talking to your best friend, ChatGPT, to be here. Because we're going to talk about something super important. If you've been through the show this week, you know that AI is everywhere. It's built into strollers, toilets, cars, everything that you've seen. But what does that mean? And so we really believe that in order to look forward, you look backwards first. And in order to understand the impact that AI is going to have on all of our industries, you have to understand where we come from. So we have a special start to today's show. The AI Foundation, everybody tells the stories of Silicon Valley, and it's always about Steve Jobs and it's about Bill Gates, but in fact, there are so many remarkable stories. And the first person we're going to introduce you to today is Jimmy Soni. Jimmy is an author of a book called The Founders. And The Founders, I'm gonna save the big reveal for him, but they're not who you think they were. And it was this uncanny moment of serendipity and craziness where they all met to create what we know today as PayPal and how they've all gone on in their lives. Jimmy will be interviewed by James Ledbetter. James is with The Observer, and if you haven't been to observer.com, you should go there. He's truly insightful about the fintech industry. And then we'll be joined by two modern-day pioneers who are looking at how those early ideas have taken us down the road and where we should be going with the future of AI. As I just said to them backstage, why can't my watch that tells me everything about my health tell me about my finance too? Like, I should have quit. Well, I was ahead last night, and my watch could have told me that. So I want you to think out of the box about the ways that we will use AI, and I want to bring Jimmy Soni and James Ledbetter up to the stage for a conversation about the founders.
Good morning, both to the people in the room and the people who are watching us on a live stream. My name is James Ledbetter. As Robin said, I'm the executive editor of The Observer. I also write a Substack newsletter, because doesn't everybody, on fintech called James Ledbetter's Fin. I encourage you to subscribe. My great, great pleasure to be here on stage today with Jimmy Soni. If you have not yet read his book, The Founders, I highly recommend it. As Robin said, it is not about the founders of the United States, but rather it is about the founders of PayPal. And Jimmy, you know, in terms of the context of this discussion, Bank in the Age of AI, one of the many things I learned from your book is that the PayPal that exists today, as powerful and as ubiquitous as it is, even then, it represents only a tiny fraction of what its founders originally intended. And so I'd love for you to talk a little bit about what that original vision was and how we got from there to here.
Sure, and I appreciate the kind words about the book. It's a great question, because you know, it's something that because PayPal is so ubiquitous, it's in whatever 190 plus countries. You sort of take for granted that it was successful, but relative to what Elon Musk and Peter Thiel and Max Levchin and others who helped to create PayPal wanted to do, it actually didn't achieve the grandest vision. And perhaps unsurprisingly, the grandest vision was from Musk. And I had time to interview him about what his vision was for the company that became PayPal. And for just a little bit of context, because it's helpful for this discussion, PayPal as we know it is the fusion of two companies. One company was called Confinity. Originally, that was created by Max Levchin and Peter Thiel. The other company was called X.com, which was created by Elon Musk. And when
they merged in, what, 99?
They merged in early 2000.
Early 2000.
It was a shotgun wedding, is the way I describe it in the book. His vision for X.com was vast, about as vast as you could get in financial services, which is essentially he wanted to do everything in financial services in one place. He wanted to do mortgages, credit lines, checking, banking, savings. If you had anything, insurance, if you had anything related to money, he felt that eventually X.com should be in that business.
He was talking about putting Bank of America out of business.
Not just Bank of America, Charles Schwab, J.P. Morgan. He wanted to compete with Vanguard to offer lower cost index funds. And this is, by the way, this is like, and people in this room will remember, like this is dial-up internet days, right? You pick up a phone in your house and your connection to your bank is severed.
Right, and you had people on Wall Street saying stocks will never trade online. I mean, it was a very primitive age. I remember it well.
And it was, and that sort of, to answer your question, that the grand vision, we have seen pieces of it come into fruition today, right? That the idea of warehousing all financial services or discrete pieces of financial services in one place is more easily done when you can create those things in code and not brick and mortar. And so that was the vision. The vision was, I mean, it was funny, when I interviewed him, he said, I wanted to just have X.com be the global center for all money. Like, what's the big deal?
Yeah, pretty modest. It's fascinating because this was, of course, before WeChat. This was before today's discussion of super app, but it's really the same concept. And here it is a quarter century later, and at least in the United States, we're still not there.
Yeah, I think, I think different people in this room would know better than I would. We're getting there, I think, with different institutions incorporating different pieces. I think AI is going to accelerate a lot of those changes. But back then, he was not just he wasn't just rubbing up against people's conceptions of what banking was. It was also there was a regulatory environment that was pretty hostile to the idea of agglomerating all financial services in one place. But to be fair, like, to put some kind of additional context, this is 1998, 1999, 2000, 2001. Most people are not doing online banking at all.
Or e-commerce at all, for that matter. Really, still a tiny minority. One of the things that you bring up in the book is that technologically speaking, the way we think about PayPal today, I use it to send a digital payment to a merchant or perhaps a peer, is actually not that hard. One of the hardest things that they faced was how to weed out fraud, and I think that's relevant to our discussion about AI. Can you talk a little bit about what the fraud problems were that they faced and how they struggled with that?
Yeah, it's an interesting thing that I didn't know going into the story of PayPal and going into the discovery and just understanding around it, which is properly understood. PayPal is the payment system piece of it is as one person who was one of the co-founders described it, the tip of a very big iceberg. And most of the iceberg is actually fraud analytics and fraud fighting. And so there is this interesting story that I devote a whole number of pages to around the kinds of fraud they faced, how they fought that fraud. But I would say that it's actually the place to the thing that surprised me most was the most important part of the story. People come to the PayPal story because of the PayPal mafia. They want to read about Elon Musk or Peter Thiel or whatever. But the actual business of building PayPal was a business of essentially opening the floodgates to fraud and having like everybody, one co-founder of the company called it the largest transfer of venture capital to college students in human history. And moving from that to a fraud rate that was actually beating players in the industry who had been doing banking since time immemorial. And so for me, it was super interesting because what I was able to write about was not a digital transaction where I send James $5, but instead an FBI sting operation where they discovered that PayPal was a part of an enterprise based abroad where people were being fleeced out of their money. And then PayPal suddenly is working hand in glove with the government to help crack down on that activity. And the second part of that, probably the most relevant part for our discussion today, is if we think of what AI is, it is very, very, very good pattern recognition and pattern matching, right? We're reaching generative AI now, so it's a little different, but even that is exceptional pattern recognition. What PayPal did in the year 2000 and 2001 and 2002 was ramped up their ability to recognize patterns of fraud. And so I had this amazing experience. I'll go on, I'll filibuster a bit because this is a good story, it's worth telling. I interviewed with this one gentleman. His name is John Kotanik. John is like one of those Marines that's cut from Central Casting. Like he like looks, acts, talks apart, has a motorcycle. You know, it's sort of like one of those, like he's not, you look at him and you're like, oh, he could plausibly be a Marine. But John was a human fraud fighter, a human fraud analyst. It was one of his first jobs out of the military, after getting out of the military. And he said to me, he's like, you know, when you came into our office before the tech arrived, like we were putting up pieces of paper like you would see in like an episode of Law and Order. Like you would put up big sheets of paper, thousands of pieces of paper to try to discover who was defrauding who. And then he said, and then this guy, Max Levchin, enters my life and says, what are you doing with all that paper? Like we could digitize all of this. Like I could at a minimum create really good pictures for you so you could compare patterns of fraud. And John said that was where the breakthroughs happened, was the mix of human fraud analysts having the technology to take huge amounts of data that PayPal had accumulated at great cost because they were being defrauded, and then use that to defeat the fraudsters.
So interesting. So just so we understand, was there something particular about PayPal that attracted all this fraud, or was it simply the novelty, the fact that they were trying to do things digitally and the fraudsters said, oh, here's an opportunity for us?
I'm smiling because there's the first part of the answer to your question is the new thing about it is that the founders of the company believed that early on, not once they got defrauded out of millions of dollars, but early on, a few employees there would recount to me conversations that they had with Elon, where Elon someone would say, well, what are we going to do if somebody has an overdraft? They pay more than what's available in their balance. And Elon would sort of like, and this is like 20-something Elon, would look at them and sort of say, well, no one's going to do that. Like, people are good people. Right? Peter Thiel had this line that he has shared a few times, but that we talked about at length. He said, you know, we thought that by naming it PayPal, we would only attract like friendly, good people, not bad people. And he thought, it's like, what's a friendly name? Like, you know, we're so friendly sounding, it'll just be about pals and people will take care of each other and be nice. And that sort of illusion disappeared very quickly. And so the part of it that was a little bit of naivete, the other thing that happened, and this is, you know, as true today as ever, they were always trying to balance the user growth on one side with fraud on the other. And at the beginning of probably most tech startups, but certainly for PayPal, the scales were tipped in the direction of we've got to grow as quickly as possible to prove that we actually have a product that people want to use. And so what do you do in that situation? Well, you lower the gates. You try to make it as simple as possible for people to sign up. But that also leads to, as one interviewee put it to me, he's like, you get a lot of people named Elvis Presley who suddenly sign up for a PayPal account.
Right, and one of the details that was in your book is that, this still sort of blows my mind, but people would actually forge utility bills, because that was a thing that you needed to sign up. You needed a utility bill for proof of address and proof that you were a real person. Like, who would forge a utility bill? But apparently people did.
Well, and the reason they did is because people in this room probably remember, there was a time when PayPal's viral growth mechanism was, if I sign up, I get $10, and if I sign James up, James gets $10, and I get another $10.
Always backfires.
You know, and what happened is that all of these, like at the beginning, it was college students and, you know, chasing beer money. But then once there was a little, you know, once sort of oil was spotted in that well, you had more sophisticated operations come around to try to take advantage of the bonus system. But then once you build a payment system, you go beyond the bonuses. Even if you cut the bonuses, you're going to have people doing everything from chargebacks to sort of weird trying to, you know, essentially create fictitious eBay sales so that they can benefit from the PayPal payment. And that was the landscape of fraud. So originally you asked the question, like, what kinds of fraud they faced. It's probably more accurate to say what kinds of fraud didn't they face.
Right.
And the interesting thing about PayPal is it started at a time when there was no playbook for fighting this kind of digital criminality. And so there wasn't even established case law on a lot of this stuff. And so there wasn't sort of a standard operating procedure or playbook. They had to make it up as they went along. But a lot of what they made up are the innovations that today we take for granted.
So it would be very useful for purposes of this panel if the story goes, Max Levchin enters the situation, digitizes the anti-fraud system, uses AI or machine learning techniques to do so, and from that, PayPal then evolves its AI techniques into a variety of other things. Is that actually what happened?
Directionally, it's correct, but there's a lot of look. I would say that the more textured answer is it was a team of people who were very sophisticated with mathematics and computer science, who enabled rapid fire pattern matching in the middle and end of the year 2000 and into 2001 that allowed the team to bring its fraud rate down from, I mean, I think it was like at, single digit percentage points down to like 0.5, 0.4%. I mean, it went down significant orders.
And the industry standard is like 3%?
I think it's lower than that. I think it depends on what metric we're talking about, but it was lower than the industry standard by the time the folks at PayPal were done.
Right, that's the industry standard today.
Yeah.
Yeah.
But the more, what I would say though is it's not one innovation and it's not one person. Part of the virtue of writing the book is you discover sort of, while we spin these narratives and we tie one person to a company, Jobs, Apple, Gates, Microsoft, et cetera, it is actually like an enormous team of super interesting people, many of whom, never want credit for their work. And in fact, I interviewed a lot of people where the first thing they said to me is, nobody's ever actually asked me about my time at PayPal before, which sort of, I was gobsmacked. I was like, really? It's such an interesting group of people. Let me give you one example of a story that is a fraud-fighting story that's not about, like, parsing through massive reams of data. Everybody in the room has had to fill out a CAPTCHA, right? You've had to find a fire hydrant or a truck or a stoplight across these images. Well, if you get annoyed by that, you can thank PayPal for that annoyance. It was the first commercial application of that technology. And it was built because what was happening, robots abroad, mostly based abroad, were creating PayPal accounts rapidly because every time you created an account, you got $10 and then you could move the $10 through the system. But if you do that at scale, it could fleece the company out of, a significant sum of money. They needed a technology that was tough enough that robots couldn't break through it, couldn't create accounts, but also not so tough that users got annoyed and said, oh, forget this PayPal thing, I'm not going to sign up, right? And in that kind of middle ground emerged this idea of optical character recognition and CAPTCHA. And so they built this thing where you had these, what they called sort of mangled letters over lines, and you had to like read the letters and then type in the letters. And there was real tension within the team. The product people responsible for user growth said, wait, this is gonna like kill user growth if we try to do this. And the fraud fighters on the other side said, well, yeah, but it's either that death or death by people stealing $10 with fake accounts that are created. And they found that ultimately it wasn't too high a hurdle for human beings, but it was a very high hurdle for computers. And so 20 plus years later, we're all still looking for fire hydrants.
I saw a great meme this week. It was a fake CAPTCHA. Which of the following are speakers? And they had like a Bose speaker and a Fender speaker, and then pictures of Kevin McCarthy, which I thought was quite funny. It's less funny today than it was 2 days ago. But
by the way, I think there's no small amount of irony in that when you go sign up for GPT-3, like you actually have to fulfill a CAPTCHA.
This is, I'm not a robot.
You have to prove you're not a robot to get the robot to answer
robot,
questions.
yeah.
Like that's how you know the robots have won.
So Jimmy, you and I could talk about PayPal all day, but I do want to ask one more question before we bring out our other distinguished guests. If you happen to be a PayPal shareholder, you've had a tough ride over the last 12 months, 18 months, whatever it is. Where do you see the company going, and do you think the stock in particular can kind of get back to that heyday of 2020 or whenever it peaked, or is the market kind of right-sizing where PayPal now sits in the broader universe?
Yeah, this is one of those where it's good to admit your ignorance every now and again, and I have to just cop to my story of PayPal was the story of the company from 1998 to sort of late 2000 to 2003, and a little bit of the afterlife, because what happens is that the company goes public, it's acquired by eBay, and then it's spun back out as a separate public company. But I like. Wall Street Bets would be better informed about the answer to your question than I would in a lot of ways, because I don't pay attention to that. What I will say is, based on what I have, based on what I've seen and what the founders shared with me, they anticipated the volume of transactions that PayPal does today back in the 2000s, early 2000s. It was this weird thing of like, at first I called BS. I was like, well, that can't be true. And then they would show me spreadsheets or show me the math. and sort of demonstrate how at some point when the network effects were significant enough, the growth was inevitable. I think there's plenty of places in the world, countries in the world, I assume, I don't know, so somebody could check me on this, where PayPal's market penetration is far lower than what it could be. And my bet is that through a variety of tools, they'll get that number up. I am the last person you want to listen to about the stock price. That said, I think that the legacy of the company shows that they built a new thing, right, with a sort of funny sounding name, PayPal, a friendly, funny sounding name. And we are talking about it 20 plus years later. And the core innovation was a buried innovation, and it was about data and pattern matching, which suggests that many of the seeds that are being planted today are things that we might not see, but that actually powerfully influence our lives behind the surface. I think about, for example, and we can, there's a technology called random deposit that was created at PayPal. This is something I wrote about, where if I try to link my bank to some other third-party service, the PayPal would send two payments, 2 cents and 5 cents, and the code is 0205. It's like an ATM code. That random deposit idea, the technology, was created at PayPal. And I think of it as something we all take for granted. So my sense is that 2022, 2023, and 2024 are going to be sort of the creation, the mushrooming of things that in 20 years we will take for granted because they become a part of the sort of scaffolding of financial services in a powerful way that I can't predict. So
really
no
good
stock
point.
picks for me.
I really appreciate it, Jimmy. I'd like to invite on stage now our next two distinguished guests, Patrick and Allison. Please come out. I assume you're there. And yeah, right. Which is, he's not a speaker. Hello. Hello. Welcome, Allison.
Thank you.
And Patrick.
Got his capture wrong.
Okay. Allison, give us 1 minute. And by the way, we will leave some, come on out, Patrick. We will leave some time for Q&A at the end. Welcome, Patrick. Allison, why don't you give us 1 minute on who you are and what you do?
Okay, well, I was a founding chief data officer for M&T Bank, a regional in the Northeast. I did that for 5 years, was kind of early in the chief data officer realm. Had a lot of fun with that. I'll tell you why I think this show is so important for bankers to come to. I'll get to that. And now I'm adjunct at Carnegie Mellon, and I'm doing consulting for startups. And I really love the potential for the data space to really transform what's possible for customers and how we can have more inclusive finance. Really great things are coming, and hopefully I'll give you a perspective on where I think we are in that journey.
Great, thank you. Patrick, you are the co-founder of Uplinq. Tell us about Uplinq.
Yeah, so Uplinq is a fintech that really empowers regulated lenders all around the world in markets as small as Mongolia and as big as the US. And we use a variety of math, including AI, ML, Rishi calculus, if any of you are familiar with that kind of stuff, natural language, to really customize and tailor offers to small businesses to help banks move capital into the hands of small business.
So this is a question for everybody. Where are the most important and most common applications of AI in the banking finance space today?
Probably most common is different than most valuable, right? AI is used a lot in fraud. Almost every entity that's doing fraud detection is using some form of AI. But probably the most exciting area is lending. If I just give you the example of what we do, the shortfall in small business lending in the US alone is about a $600 billion shortfall.
When you say shortfall, you mean?
This means people asking for loans who are qualified for loans but don't get loans.
Got it.
Because it's too difficult to understand, is that person going to be creditworthy? And frankly, and Allison will talk about this, but banks like to take the easy way out if they can, right? You know, this is not the domain of oftentimes bright, creative people.
And this is an opportunity, right, for fintech companies who can figure this out, in theory.
Absolutely. I mean, I think one of the things we see is this great marriage between fintechs and banks now increasingly. You know, it used to be who's going to win the war, and more often we're finding partnering together because they're really great at operational stuff. They're really great at satisfying regulators. And one of the tough things a lot of these advanced mathematics is you can use them, these black boxes, in places that you don't have to then turn around and show that you've been treating people fairly. You show that it promotes safety and soundness of the institution. So now what you need are mechanisms to translate that back. Use the power of those tools to translate them back so people can actually see, yeah, that's a good solution.
Allison, I know that you work in industries with big data and artificial intelligence that aren't strictly speaking banking and finance industries. Can you talk a little bit about what finance might learn from AI applications in other industries?
Yeah, so I think it's great. I hope there are a lot of bankers at this show. This is the first time I've come to CES. I have learned so much. So I have a question for the audience. I want to know how many of you stopped by the UScan booth? Raise your hand if you did.
One.
One?
Two.
Do you guys not watch the press clips? This is like the hottest thing. Okay, so the UScan, this is what I think we can learn. UScan is a toilet with a disc in it that does daily urinalysis every time you go to the bathroom and gives you all kinds of biometric data. And when I saw this, first of all, I couldn't even get a picture of this toilet. There were so many people crowding around this toilet. This was
Live demonstrations right here.
yeah. Anyway, I suggest you check it out. But what struck me when I saw this was that bankers have all the transaction data. We should be able to do what's the equivalent of biometrics? Financial metrics for customers so that they can get effortless, real-time, daily, painless access to their financial health. I think that's what everybody wants. And I think that, to Pat's point, we can start to open up markets. We can identify people who have been underbanked, who have not qualified for lending in traditional ways by using data in more creative ways. And I really think there's an opportunity to learn from the consumer sector because the consumers, we got to listen to the consumers. They're driving. They come to banks with great expectations for what should be possible because they've experienced it in all of these other sectors. And this has been something I've been preaching for years, is that bankers can't just talk to bankers. We've got to look at other industries and see what's going on. So my top tip for the day, go check out UScan.
Allison has found the little-known connection between the commode and commodities.
Hey, good.
Well done. Patrick, when you talk about lending, the application of AI to lending takes us into, as it were, a white hat, black hat territory, right? So, if you think about a conventional situation where, from the 1950s, an individual goes to a bank and asks for a loan, there are maybe 4 or 5 variables that they look at. What's your income? What kind of collateral can you put up? How long do you need to pay back? Where do you live? But as we know, there's a history in this country of redlining and discrimination against underrepresented minorities in terms of lending. AI, because it can analyze hundreds of variables, gives, at least in theory, a black hat lender all sorts of ways to discriminate that might not show up in our laws because the way the laws were written decades ago. How do you think about that with the clients that you deal with, and kind of is there an industry best practice?
We actually spent 2 days last year with the Federal Reserve on this very topic, so it's a great question. The reality is AI. Every problem you're trying to solve has an objective function, right? And what you can do is, if you think about what Nash equilibrium is, I want to find out the happy space between 2 parties so they can come together and make a deal. Imagine if you blew out Nash equilibrium so it was multidimensional. And now one of the participants in that was a regulatory purview, right? One of it was maybe ESG goals and so on and so forth. And what we're able to do is actually say, you've got to do better there, right? When you're looking for a solution. And so, as an example, in in the U.S., when we talk about minority groups or people that we need to make sure we're treating them well, we call them protected class. That's a technical term in the industry. And so with protected class, what we actually do is say, how do we identify success factors within this cultural group? How do we identify success factors within people who are dealing with these kinds of economic challenges or within these geographies? And now the model is free to begin to look for defining success and identifying success factors that way. So what's wonderful is you can actually use this in very powerful ways to make the kinds of things happen that we talk about from a social perspective. It just takes a little more work and a little more thought.
Interesting. We've got about 10 minutes left, and I do want to get some questions from the audience. I believe there's a mic over there if that's where we're asking people to come speak, or it's a small enough room that if you just want to stand up and shout out your question, that's fine too. But let me ask one final question before we do that, and that is, we're talking about banking in the United States, which has a specific set of laws and regulations. Are there places outside of the United States, and Patrick, this is mostly for you, although please jump in, Allison. Are there places outside the United States where there are important lessons that we might learn and incorporate here?
Every environment has different information flow, so understanding how you adapt to that information flow and take advantage of it. But we started a program a couple of years ago in Nigeria that has now grown lending in Nigeria tenfold.
Oh, I think I got an email from Nigeria about that, yeah.
Yeah, and so
somebody wanted me to lend them $1 million or something.
For those of us who may not know, Nigeria now is like the 23rd largest economy in the world, okay? And so it's off our radar a little bit, but if you think about what's happening in north of Abuja, in places where Boko Haram is really big, if you grow the economy and you make something thrive, then you make a better way of life for people overall. And you create a situation where you can really solve some of these big systemic problems. I can say it's repeatable in places like Bangladesh and the Philippines, and I mentioned Mongolia earlier. So what do we learn? I mean, sometimes they're really interesting. AI will come up with some creative things. If I'm lending into a rural market where educational levels are low, and I see perfect spelling and perfect grammar, somebody other than the applicant probably filled that out. And so this ability to detect, right? I can't read any Bangla. So if I read a set of financials, I can't read it. But what the system can do is look and see the detail and the granularity and the attention to what's important, even when it can't read the words. And so there's some very powerful things we can use these tools for that actually move the world in a much better place.
Great. We have a little time for audience questions.
Could I just tack on
please.
something on to what you said, which is the thing I think that the American press is not covering within international finance that is interesting is, in the American press, crypto at this point is either like a bad headline about SBF or a punchline about Dogecoin. But what we should be looking at are the trend lines for crypto use in countries where the volume of transactions is extraordinarily high, where trust in those systems is extraordinary. I think it's like Vietnam. There's like 80 something, some ridiculous percentage of the world's total crypto transactions are happening in like 3 or 4 countries that are not named the United States.
Turkey.
Yeah.
Yeah, a few others. But what's interesting about that too, though, a little asterisk there, is that countries that have gone so far as to make digital currencies into legal tender, El Salvador, Nigeria, it's been a big bust. Which is interesting. But you're right, the trust thing is huge, and also inflation, obviously, is huge.
And my bet is that there's some intersection of the amount of data that you get from those transactions, as well as as well as just the technology itself, where if we shifted focus there just a bit, there's real opportunity, because this is not a situation where you have somebody who's like running a criminal enterprise. These are actually just people trying to transact, right? The sort of fundamental stuff of banking. And I think it's not paid attention to enough, which is the question.
No, I agree. I mean, I write about this all the time, but I'm the only one. Okay, audience questions, please. Raise your hand or come to the mic. Anyone? Yes. You're right by the mic. How convenient.
Exactly, that's why I asked. So, hello. Thank you very much for all the insights. Actually, I'm not from banking industry. I'm mainly working on consumer goods, but I'm really interested in the data that you are sitting on. What do you think about utilizing the data in the banks and sharing with the other industries, especially with the industries that have issues with access to the data, especially consumer goods, because they are dependent on third parties, retailers, e-commerce companies, market research, and they really seek for different solutions. Is there any plan going forward sharing the data that you have with other industries?
Great. Allison, I think that's for you. Data and its role in kind of broadening our understanding of transactions.
Yeah, so there's this whole movement now, data marketplaces, and companies are really starting to identify, like, what are their data assets? You know, you hear people talk about data as a product. So there's, you know, a movement toward sharing data across industries and figuring out how do you combine different data sets from different contexts and create new products with it. I don't know if that's the direction of your question, but that is very much underway. I'd say it's in infancy to some degree, but the infrastructure, the technology is all there to make that possible, and it's now just a question of people actually coming up with the ideas of what data should I combine with which other data to create some kind of interesting insight or product. So infrastructure's there. I think we're early in the adoption of monetizing the value of that.
And I would just add, and maybe you know this, in my view, the open banking initiatives in the European Union and in the United Kingdom are way, way ahead of the United States, like 3 or 4 years ahead. We're getting there, but it tends to be done through third parties here, whereas in the UK and in the European Union, it was actually mandated by laws that were passed a few years ago, and so the banks themselves are doing it. Here we get third parties to scrape stuff, and it's a little less efficient, but it is underway, absolutely.
To give you an idea of what's possible, though, we collect data from about 10,000 different sources around the world. And in the US, we collect about 12 billion data series that we're analyzing on for building model out. In a marketplace that you might think might not be as data rich, like India, we collect about 3 billion data series. And so the richness of the information that's available to help us turn a no into a yes, or make a yes a better fitting yes, is really, really big. And but it takes both the modeling technology and the data, right? The modeling technology informs you about what of that data is really valuable and how do I untap it. That was a great question.
That was a great
it's
question.
The intersection.
Do we have another question? Yes. You can make your way to the mic, or you can just yell.
Shout. Yeah.
Yes.
Yeah.
This is a fantastic question. And if you look, every 2 years, the Federal Reserve does a huge survey of Americans and their attitudes toward banks. And the good news is that the percentage of Americans who are unbanked is going down every year. But when you interview those people, the number one thing they say is, I just don't trust banks, and or I don't have enough to make a minimum deposit into a bank. And there are a lot of fintech companies who are trying to, shall we say, take advantage of that situation, and that can be for good or bad. And AI, in my opinion, can be used to accelerate the goodness or the badness of that process. But Patrick knows more about this.
Yeah, it's a neutral thing. And so what you have to do is, a lot of AI today has been, it kind of learns like, if you abandoned a child in the woods, it's got to learn gravity, right? It's got to learn the seasons. And they let it sort of go off in these pathways. What you can do is you can educate it and make it a lot smarter, and you can tell it what's important. And so you could imagine both black and brown communities traditionally starting off like immigrants who may not have a lot of capital, rural communities that tend to have highly seasonal or cyclical flows. When we step into an area, we actually use a form of math that Einstein used for general relativity that basically says, what's a win in this environment? What's a win in this culture? What's a win in this context? The models that we deploy in Ethiopia look a little different than the models that are deployed, if we go to Bangladesh versus if we go to the US, because what they're doing is they're learning how success happens there. And when you do that, it makes a big difference. We're actually doing something with the GSEs, the people who do mortgage financing within the US, specifically directed toward better serving minority populations, because the reality is FICO sucks in that category, right? It really does not do a good job because it tries to be a one-size-fits-all.
Yeah. Ladies and gentlemen and non-binary attendees, we are out of time, but please join me in thanking this fantastic panel.